Okay, good morning, everybody. Hope we're having a good week so far, and welcome to our webinar on consumer duty. 2 years on, progress, practice, and proactivity. My name is Simon Chapman. I'm a Senior Director here at Complyport, and I'm joined today by my colleague, Hannah Hewitt, one of our Associate Consultants and expert and specialist in the consumer duty. Hannah will be doing a lot of the heavy lifting today. I have the joyful task of introducing her and assisting where I can. So we have a packed agenda today, full of key insights, updates of regulatory expectations, and practical takeaways, hopefully to help you stay ahead of the curve when it comes to implementing and progressing your consumer duty compliance. So over the next 30 minutes or so, we'll have a look at how the duty has evolved and what good might look like. So briefly to set the scene, I know that a lot of us actually have been consumed with the duty over the last couple of years, but just to set the scene for everybody. The consumer duty was or is a significant regulatory framework aimed at ensuring better outcomes for retail consumers. It was originally introduced in the first instance by the FCA because the regulator identified persistent issues such as unsuitable sales of products and services, poor value for money in some financial products, misleading or unclear communications, and inadequate customer support, particularly in the areas of customer vulnerability. The whole thing started, if you can recall, back in 2018 with the first discussion paper, where the FCA really wanted to know whether the existing frameworks such as TCF were actually fit for purpose or whether they needed changing. That followed a couple of years later in mid-2021 with the first consultation paper, followed very quickly 6 months later with the second consultation paper. And finally, the policy statement and final guidance was issued in 2022 when we all started to prepare implementation plans. So 31st of July last year marked the first anniversary of the implementation of the duty, and firms were then required to assess progress made towards achieving targets under the duty and to report internally to their senior managers on that progress made. So in the light of the original reasons for the duty and why it was introduced, and as we're now rapidly approaching the second anniversary of implementation, it seems a good time to take a look at the progress made and what the regulator is expecting and where gaps are appearing. So what's on our agenda today? We will cover a refresh on what the duty is all about. We'll have a look at what the FCA expects firms to have done over the last 2 years and what they think they should be doing now. We'll have a look at the key issue of vulnerability. We'll have a look at what we're seeing in the real world. We have a lot of clients who are active in this area, and we can sort of relay some of those experiences for you to help you. And finally, we'll consider how firms should be moving forward and any changes that they may need to make to their approaches to implement the duty properly. And finally, we'll hopefully have some time for some questions at the end. So please feel free to send in your questions and we'll do our best to answer as many as we possibly can. So on with the show.
So I think it's really important here to begin with a quick refresher. Consumer duty, introduced by the FCA, sets higher expectations for the standard of care that firms give to retail customers. It's not just about treating customers fairly, it's about delivering really good outcomes consistently. We've come a long way, as we said, since the duty was first proposed. And as you can see on the slide, the final rules and the kind of implementation planning happened in July 2022 and then moved into April 2023. The duty obviously then went live for new and existing products in July 2023 and then moved on to closed products in July 2024. So when we talk about closed products, this is where the product or service is no longer available to new retail customers, but existing contracts continue. And here we are in June 2025. Most firms will be looking to complete their annual Consumer Duty Board report around this time of year. And it is expected that firms are able to demonstrate measurable progress from the introduction of the duty. This is not to say that every policy and procedure is going to be perfect at this point, but it's about showing the effort that you're making under the duty and the steps that you are taking. As we approach kind of the 2-year mark, the FCA's expectations are crystal clear. It's not just enough to comply with the duty anymore. You need to prove how you're delivering better outcomes. So moving on to kind of FCA expectations 2 years on. What should firms be doing now, 2 years in? There's an awful lot that you can consider here, and unfortunately we only have half an hour today. We don't have time to run through everything, but let's start with looking at the annual Consumer Duty Board reports. So I think it's worth saying that this is not just a tick box exercise. Instead, it should really capture your firm's journey and the progress that you've made over time, and particularly over the last year. As part of updating your board report, you should consider demonstrating how you are outcomes testing. So outcomes testing is not a once-a-year activity. This should be continuous throughout the year. For example, an insurance company might have a process to test that their claims processes remain fair and efficient. This might include analysis data on claims processing times, customer satisfaction, and the number of complaints received related to claims. The FCA wants to see evidence that you've identified gaps, taken action, and improved outcomes as a result. This is where strong MI, robust testing, and kind of really honest internal challenge really matter. A clear FCA priority this year has been surrounding vulnerable customers. We will touch on this in more depth later on in this webinar, but a recent research report from NICE, who are a company offering AI-powered platform solutions, found that whilst 17% of financial services customers in the UK self-identify as vulnerable, as many as 67% of those customers could potentially be classified as vulnerable, assessed against the FCA's criteria for vulnerability. Now, this is well over half the population, and so if there are firms out there that don't believe they have many vulnerable clients, we would tend to encourage you to assess this again, and preferably after some vulnerabilities training. Relating this back to your Consumer Duty Board report, it's important to capture the progress that you've made in this area and to document all training that has been undertaken by staff. Moving on to fair value assessments. Fair value assessments, again, must be updated annually, and the development of new products and services should always be accompanied by a fair value assessment. This isn't about pricing alone, as I'm sure you've heard. It's about considering the overall benefit versus the cost to a customer. So as part of the annual review, firms are expected to reassess and reevaluate their fair value assessment accordingly. When you're reviewing your fair value assessments, it is worth noting that the FCA are pushing firms towards identifying absolute value of their products as well as relative value. So as well as comparing with competitors and the market, you also need to identify absolute value. It would be recommended for firms to consider the qualitative reasoning for why a product offers fair value to an individual customer in respect of the price that they pay. So considering the access to support and the customer experience and the customer journey through the product's life cycle, not just at the beginning of a sale. So thirdly, embedding the duty into your culture and your governance. Embedding consumer duty goes beyond just frontline staff and the training that they receive. It requires a real tone from the top. It requires alignment across functions, and it requires governance structures that prioritize consumer outcomes. There's no single initiative that I can give you here that's going to change this. It's kind of about consistency and mindset. For example, consumer duty training should not just be given to investor relations teams or client services teams. It should be provided to all of the teams to embed the consumer duty mindset across staff and across a company. There are a lot of teams that don't interact directly with clients on a day-to-day basis, but they could be part of the product development process, for example. And it's really important for these teams to be aware of the responsibilities and the requirements that come from Consumer Duty. Okay, so finally, some good and poor practice. I think this is where a lot of the value really comes from. In a recent webinar, the FCA identified that strict and unbending processes and procedures were kind of one of the biggest obstacles for retail customer outcomes. The FOS explained that they have had many complaints from clients that have had to continually explain the same information to firms at the expense of the customer's time and well-being, simply because the firm's processes didn't allow for the staff to respond in a way that was fit for the client. They talked about ways to potentially mitigate these risks and identified that providing a dedicated representative to a retail customer allows for continuity of service and removes the need for a customer to explain their circumstances over and over again. If you have not done so already, it would be worth considering if there are any processes and procedures that you have in place that may be adapted to incorporate a level of flexibility that is needed for retail customers, and particularly for those that you identify as vulnerable. This is a great way for firms to evidence that they have fully considered good client outcomes. Sometimes it's appropriate to step off script, especially when dealing with customers in vulnerable circumstances. Staff should be trained and empowered with the right skills to allow for this. On the flip side, poor practice. An example of poor practice is when firms rely solely on reactive complaints data, addressing issues only as and when they arise without offering follow-up support or delving deeper into the root causes. This approach is not enough, but particularly not enough under Consumer Duty. Firms should be proactively analysing all available data to continuously improve the client journey. When the same types of complaints continue to surface, it's a clear indication that a pattern is emerging. And in such cases, it's essential to work backwards to identify the underlying cause and then implement an effective long-term solution to prevent reoccurrence. So moving on to vulnerable customers. As I said, this is a huge area for the FCA this year. The FCA defines vulnerable customer as someone who, due to their personal circumstances, is especially susceptible to harm. So all customers are at risk of becoming vulnerable at any time, but the risk is increased by characteristics of vulnerability. And this can include poor health, life events, low financial resilience, and low capability. The FCA still maintains that vulnerable customers continue to report poor outcomes when compared with other consumers, particularly where a customer has multiple different characteristics of vulnerability. In terms of FCA guidance, the FCA expects firms to have a clear vulnerable client policy. This must be more than just words. It needs to live in your culture and your day-to-day operations, and it should be made available to all staff members, again, not just frontline staff. It's important to note that this policy, within this policy, that vulnerabilities are not static and they can occur at any time to any single person. It's not just about being elderly or being hard of hearing. Sometimes a vulnerability is permanent and sometimes it's only temporary. But kind of what really matters is that the vulnerability is identified in the first place and that it's then treated accordingly. A huge theme that we've seen kind of emerging recently is grief training. Lots of the webinars that I've been a part of and watched have mentioned grief training and also training on vulnerabilities, and it's becoming a much more common occurrence and it's becoming much more necessary as well. Empowering frontline staff with emotional intelligence and compassion is crucial. Identifying vulnerabilities can't rely on just tick boxes or checklists. We need real human understanding. Vulnerabilities aren't always obvious, and in the UK, more and more people are experiencing low financial resilience, which is obviously just one of the FCA's identified vulnerabilities. This isn't always obvious when you're first talking to a customer, as it's something that people tend to get quite embarrassed about, and therefore they will try and hide it from you. It's really important for frontline staff to have the right training to pick up on these characteristics at the outset so that the customer journey can be tailored accordingly. A good example of this is Aviva, who have recently partnered with Samaritans, who are an emotional support charity, to provide their staff with the training to develop the right skills for identifying and dealing with vulnerable customers. So again, good and poor practice here. We'll start with poor practice this time. So asking a bereaved client for the same documents twice. Often when you're dealing with bereaved clients, there will be a request for death certificates. Bad practice would be holding on to this document longer than necessary or not having the efficient processes to ensure the timely handling of such documentation. The aim here, I suppose, is to get the documents back to the client as soon as feasibly possible to avoid any undue stress, as they are likely dealing with the same request from multiple different providers at this time. Again, on the flip side, good practice is offering a single point of contact and personalized communication options, as we previously mentioned. For example, if you ask a client when the best time to get hold of them may be, and they inform you that they often have commitments in the mornings, ensuring that a file note is maintained on the client record to ensure that the dedicated representative only rings in the afternoon when the client is available to talk. Another example of good practice here, which was provided by the FCA, was a firm identifying a disproportionate number of complaints relating to the accounts of deceased customers. The firm reviewed its bereavement customer journey on the back of this, including all of its communications, and then they set out clear objectives for their review. They then interviewed and tested documents alongside individuals who had lived experiences to understand the current customer experience with the firm and also their competitor providers to identify any common pain points and as a result, good practice. The firm then developed principles to inform the future customer journey design that would help deliver a better customer experience and developed recommendations for enhancing its current processes. These recommendations included improving clarity of communications and explanations of the next steps that the executors needed to take, as well as signposting customers to sources of financial and tax advice if they hadn't already been made available. The firm then allowed time to embed these recommendations before re-evaluating the complaints data to determine whether outcomes had improved off the back of their review. Okay, so what have we seen at ComplyPort? We work with a range of different financial services firms at ComplyPort, and we have seen a few consistent themes emerge. So the first one being proportionality. We've had a lot of questions about proportionality, particularly from firms kind of further down the distribution chain. The FCA does allow for proportionality, but it doesn't remove the responsibility of firms to deliver good client outcomes. If you are further down the distribution chain with more limited exposure to retail clients, then the FCA will expect proportionality to be applied. Another common theme that we've seen is kind of compliance manual updates and also just policy and procedure updates on the back of Consumer Duty. We've supported lots of firms in updating their compliance manuals in particular to include tailored policies. So obviously most firms have a vulnerable client policy, including that within your compliance manual, as well as any staff training requirements and also duty aligned governance. It's really important that the duty is embedded across a company's documentation, and it means updating your policies and procedures accordingly if you haven't already. Finally, technology and human touch. It's a theme we hear about often, not just in financial services, but all over the world, in every industry. AI is a powerful tool, one that gets kind of more powerful every day, which is both exciting and terrifying, in my opinion. Human touch, I think, is still really important, particularly when you're dealing with complex or emotional client scenarios. The human touch is still really invaluable there. You can't just put a chatbot out and expect it to take care of everything for you. We would always encourage firms to use technology to enhance your propositions, but remembering that engagement needs to be appropriate for the individual customers, particularly for the older generation and sometimes the younger generation. We don't want to be discriminatory. There is sometimes an inability or a reluctance to use more advanced technology or to talk to a robot on a website. And this becomes part of the customer journey and affects the overall client outcomes. So definitely worth thinking about. Okay, moving on to next steps and resources that are available. So I think for some firms, and this isn't for all firms, but I think for some firms, there's a large mindset shift that needs to happen. It's not about asking what the minimum requirements are for your firm under the duty. The consumer duty is not going away, and it's not just a compliance burden. The firms that kind of embrace this is an opportunity to differentiate and improve their customer offerings will have a competitive advantage. Firms that continually ensure compliance with the duty will, as a result, create, a reputation for strong client outcomes, and firms will only benefit in the long run, as well as maintaining the standards of care for retail clients. Keeping it front of mind, make consumer duty part of all of your internal conversations, particularly during the product development stages. Excuse me. It's not good enough to create a product and then ask if it's delivering good outcomes. This should be considered and evaluated throughout the development of every product and service that you bring to market for retail clients. Again, use your MI, reflect honestly, and ask, are we providing good client outcomes by offering this product or service to the market? In terms of resources from ComplyPort, we maintain a whole host of resources that we've used to support clients with consumer duty. Two resources that the clients have found particularly useful are the consumer duty checklist and the consumer duty guide that we maintain. We will be sending out a copy of the consumer duty checklist and the guide with a copy of this webinar after we finish up. So please do take a look at those and let us know if you have any questions or need any kind of further assistance with those.
Excellent. Thanks, Hannah. That's really helpful. Just to sort of re-emphasize some of those, some of you who don't know ComplyPort particularly well, we do have our own AI tool. It is our virtual compliance assistant, which is on screen now. Feel free to sign up for a free trial of this. It is genuinely like having your own research team. I find it personally very useful, and it's useful for a lot of firms. So please feel free to sign up and test drive it. We're very happy to get your feedback on it as well. So feel free to do that. So we said earlier on that we would look at some Q&As, and although we have had one or two come in, so let's just quickly run through those. Forgive me for reading them out. Maybe Hannah, if you can take this first one. Should firms still have a consumer duty champion?
It's a good question, one that I have received quite a few times. Obviously, whilst the requirement for a consumer duty champion was removed for all firms in February of this year, we've found that many firms have now appointed a consumer duty champion anyway, or maintained their consumer duty champion, particularly at board level. We've kind of seen this as a great way to kind of still encourage challenge at board level and ensure that the duty remains relevant. So whilst not necessary, highly encouraged.
Great, thank you. And pertinent to the timing of our webinar today, and this is coming from a couple of people actually. The question, and I'll pick this one up, is can we change the date on which the annual report to our board is submitted? The short answer is yes, you can. The slightly longer answer is that actually the FSA doesn't particularly prescribe when the annual board report should be produced. It simply says it must be produced at least annually. So it's quite vague in that sense. So it's not saying it's every 12 months. It's not giving you a particular date. It's at least annually. So it could be possible to take the view that actually, as long as it's produced any time in 2025, it's at least annually since the July 24 report. I guess from a compliance perspective, we always come from a belt and braces conservative approach. We would say it's prudent to ensure that if there's any gap between the reports, make sure it's not particularly materially larger than 12 months. So, for example, if you have your last report was July 2024, which it was in the case of most firms, and you want to change the report date to maybe sort of to coincide with your year end at 31st December, we would suggest that it's probably too long to leave it 18 months between reports, and you probably ought to actually do a report now, roughly 12 months after the previous, and then do essentially what is an interim report at the end of the year, 6 months later, and then you can pick it up annually thereafter. I think it depends on your approach, but I think that going to about 3 months, if you were trying to pick this up in, say, August or September, I think arguably it's easier to actually just defer the July one till August, September, but possibly not much later than that. The important thing, of course, is during this period, you need to be ensuring that you're continually monitoring compliance with the duties, obligations, and reporting that internally to the relevant personnel. So yes, it can be changed. It just depends on how long you want to defer it. Okay, we have another question that we've not had before, actually. It says, if we uphold a complaint against an advisor, are we deemed to have failed in our duty to the complainant? Another good question. And the answer, without wishing to again sit on the fence, is perhaps it could be a failure. And it all depends on the nature of the complaint, to be fair. So if it was the fact that the issue that's been complained about was something obvious like unsuitable advice or failing to do something contractually that you had to do. So, for example, you weren't doing annual reviews. Then actually, yes, it's a very good chance that you're failing in the duty as a consequence. However, a lot of complaints tend to revolve around sort of simple human errors, or that's the ultimate sort of the germ of the actual complaint is a human error, maybe just forgetting to do something. That probably, depending on what that thing is, probably not going to be an instance where you are failing. You're failing to comply with the duty. So I think it depends on the nature of the complaint, but fundamentally, you need to actually look at all complaints and all issues arising from the duty and to see what has happened, why it's happened, and to remediate any issues. And as has been the case with complaints handling for a long time, if you do come across any systemic issues, the expectation from the FCA is that firms should be going and looking at those clients, even if those clients haven't complained. If they're affected by the same issue, they should be looked at and to see whether any particular action is required on the part of the firm. So that's covered that one. Okay, we did actually cover this particular next one a little bit in the. Let me just check. Yeah, in our presentation. Yes, basically, it says, is a price and value assessment all about being the cheapest? I mean, it's very quickly, simply no, it's not. It's a matter of determining the value of the service that you provide to your clients. Obviously, cost is clearly an issue and a large part of that assessment, but it's the value that you provide that is key. So low cost don't necessarily equate to acceptable value assessments if the service is not worth it, worth that cost to the consumer. So benchmarking we always consider as appropriate. Benchmarking similar products, similar services from your peers, that'll be part of the assessment. And quite often you find that the market generally sets the rate. But simply being low cost doesn't actually mean you're providing good value. So hopefully that will set a few minds at rest. And the last one, we get this. We have had this fewer times, I must admit, in recent months, but we used to have it a lot at the beginning. And this question is, are we at all affected by the consumer duty if we don't deal directly with retail clients? Yeah, a very used to be a common question. The short answer is actually most firms will be affected by the consumer duty if they have some exposure to retail clients, not necessarily the fact that they'd have direct exposure, so they don't necessarily have to have retail clients in their scope of permission on the FCA register. But actually, if there's an exposure to retail clients somewhere down the distribution chain, as Hannah mentioned earlier on, there's a proportionality issue that the FCA would expect firms to take in mind. So, how much of what you do is actually going to affect the retail client who's further down the distribution chain. Once you establish that, then you can determine to what extent you're caught by the duty. But normally, it's fair to say that if there's a retail element somewhere down the line, there's you need to take some account of the duty. The extent to which you do what you do is actually determined by how close you are to that outcome, I guess. And looking at the time, that sort of brings us quite neatly to just about time for this morning. So I think that's really all we've got time for. We can give you your rest of your morning back, which is excellent. We have had a lot of other questions today, and we'll do our level best to actually answer those directly to those who actually raise those questions after today's session. So hopefully we'll be feeding back to you individually on those. If you're interested, we'll have a copy of a recording. Today's webinar will be available after we finish, and we'll provide that on as required. So it just leaves me to thank you on behalf of Hannah and myself for attending today. I hope you found it useful. I hope that you found it's given you something to think about, how you can possibly improve what you do and develop what you do. So we'll leave it there. So have a very good rest of the morning. Thank you for attending again, and we'll see you at the next event. Thank you very much.
Thank you.